Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And actually, this is for the close of business on Wednesday, and we're already in Thursday session because I'm late. I'm after 6 p.m., and this is Daylight Standard Time. You're getting a bounce after the huge break that the markets had today in stock indices. In fact, it was one of these days where you saw a flight to quality. You had gold get a bid during the day. You saw that you had the bonds and notes getting bids. In fact, they're up again tonight. Crude oil was a surprise to me that it got a bid, and I'll come back to that in a minute. And the dollar was the strongest of the currencies. Now, we're getting that. You had a big break, so you're getting an early evening reaction as the market goes the other way. Okay, coming back to the crude, the thing we have to keep our eye on is today is the day that the sources say that the Saudis have kicked up their production to 12 million barrels a day. They said they would do this, and it should be now. They also are saying that the Saudis are considering putting out another 300,000 barrels a day out of their reserves onto the market. So the battlefront's pretty set. It's basically the Saudis against the U.S. trying to hurt us and trying to hurt the Russians to get back their market share. Why? Saudi Aramco and their coffers. That's the game. Okay, you get a bounce in the market, but I'm going to ask you a question. Who's buying it? That becomes the problem. So the Saudis have to be offering this out there somehow with the discount and getting somebody to take it. I don't know who that somebody is. It could be Syria. It could be a number of different countries. We'll see just who it turns out to be. When we look at a weekly area chart of closes in the Dow, I think you'd agree that we had a big break, a small bounce on just a closing basis. This is a weekly close, and the market is again down. It's down 63.5 points for the week. Okay. When we take a look at the charts here, now I did a special report today in all of the stock indices using Fibonacci counts. So if you like the Russell, the NASDAQ, the Dow, I did it all in them, and I did it in the VIX as well. And as you can see, you had a 38% retracement in the market. Terrific. Now you're stalling there. So far, this is no more than a classic bounce in a bear market. Yes, if you get up over these levels, maybe you get to the 50% level, but you'd be struggling, and that still keeps the market very much in the bear camp in the bigger picture. When we take a look at today's action, you went from having a pattern of higher lows and higher highs to with, I put this arrow because if you look at today's action, the big break under, and even though you're getting a bounce, you stepped away. So this corrective move ran its course. Now the question is, what next? And the market's not defining that as I look at it. When I look at moving averages, we're away from the 18-day average of closes. That, on the way back up, is likely a resistance point. Bollinger Bands, if you cleared this number of the 2635.75, would offer resistance around 2800. And if the market can stall here, if it comes back down, these old lows, well, the support comes in at the Bollinger Band against them. So that's a likely test low area that might grab some traction. When we take a look at momentum, it had been pointing up and is sort of drifting right now sideways. In the NASDAQ, we still have the pattern of higher lows, higher highs that is neutralized because the market got back under the 18-day average and it's staying there. So when you get the bias down, it counters the force of the swing line pointing up. Momentum has also flattened out at this point. In the Dow, the trend is down. The market's got now a pattern of lower highs, lower lows. That's bearish. The bias is down since you're under the 18-day average, and momentum is flat. I'm going to still say it's in a downtrend. You'd have to take out 22,386 to negate it. Even if you did that, it would not turn the trend up because you'd end up with a lower low and a higher high. So I think the bears grabbed control back today, and I think they did the identical thing in the Russell. If we take a look, you can see lower highs, lower lows, momentum which had been pointing up here, you can see it like that. Now it's pointing back down. By the way, I've got back control of this device, so I'm pretty happy. Next in the VIX, The VIX is one of these markets that's got that higher high and lower low pattern. You see it right through here. So it's whipsaw. I would not be surprised to get a rally back up to the 18-day average. You're in oversold territory. The way you correct that is one of two ways. You either embed, and you're nowhere near it. It's where the blue and the red lines both go sideways under 20, or the market gets a rally. We'll see which one. In the T-bond market, getting overbought, and because neither the blue isn't with the red over 80, just an overbought condition, challenging as it's climbing up here, this old area that we had, but there's a lot of resistance because you've got that Bollinger Band where 95% of the time the market stays within those bands as the resistance point. The 10-year note, as I said yesterday, is doing a better job of showing itself. And as you go further out in the curve yield, you see this. And the market's got the higher lows, higher highs. If it made a run to the upper Bollinger Band, you're very close to that, to that all-time high in futures, which means getting back to those lows in real rates. Next, we get to the dollar index. Could I be clearer that the battleground's the 18-day average of closes? I call that the line in the sand. Depending on where you close against it, the bias is either up or down. Well, the bias moved back up today. The trend turns down in this market if you take out 98.34.5 because you'd have lower highs, lower lows. So the bulls, if they're trying to hold this dollar together after this correction, they've got to be fighting for it right here and not letting that happen. So going home, they have control. In the eurocurrency, it's the flip-flop. You got lower highs, lower lows. I wish I didn't have that big of a chart where it takes up the whole screen that way, but that's what it did. The resistance point is 110.21.5. To get out of this bear trend and take control, the bulls have to get the market over 111.87.5 right now. Won't be an easy task. Japanese yen turned bullish again. The market came down, and if we come back a little here, you can see how this market had a big break, and it ended it when it took out this high right here. As soon as that was taken out, you broke the pattern of lower highs, lower lows. Where did the market rally to? That line in the sand. You can see where that at, and that is this past March 27th. Market's still fighting the battle there. This is yesterday. And today it's trying to resolve itself to the upside. It would take a move back under yesterday's low, which was 92.28, to negate this attempt to the upside. Now, resistance very far away. I don't know that without some big event, another stock market break, that you can make a run like that, but anything's possible. The trend is up, the bias is up, momentum's up. Everything's pointing still to the upside. In Bitcoin, this is the June. And you're back into the bull camp. You've got higher lows, higher highs. You would have to get back under 62.30 to negate it. Now, in all fairness, you're also overbought at the same time. So I think you're just fighting this battle now, running that 18-day average of closes. Here's June Brent versus June WTI. That differential recently got down to $1 difference. Now it's trying to move up a little bit right now, and it's back up to $1.56. Okay, so gaining a little bit on it there. When we look at the chart action, it's still bearish. I actually should have taken this red arrow and put it here. You'd have to get back over 27.31 to negate the swing line, but this rules the day. When you have an embedded reading, to me it just says that the pros are waiting on the other side to go short on rallies. When we come to the WTI June, I've got the arrows in the right spot, lower highs, lower lows. Now if we look at these numbers, both numbers are under 20 today. Both numbers under 20 yesterday, not the day before. Do you see that? And now you can come back, and the day before it wasn't. So it's not an embedded reading. It's an oversold market. You need more than 2 days to get that. In the June rebound, you have a pattern of a higher high, lower lows. The market's trying to figure out right here what to do with this. You lost the embedded reading, which still leads me to think the price is going to try to get back to that 18-day average of closes. Next, we get to the nat gas, which went back into the bear camp. You've got the lower highs, lower lows. You have an oversold condition in the market. I see that. Are we going to challenge these old lows? Well, you easily could. We're at that funny part of the year. What's the demand for this market? We're at that time where we don't have snow coming anymore in most parts of the country. Chicago's going to be in the 70s next week. That means East Coast is going to be that way. We're already getting warm in the South, but it's still April. You don't get overly hot. I used to live in Florida, so I know. Interesting market. What I did, by the way, today is I said I would put out a special report on my ideas on the Fibonacci numbers in the key stock indices. You saw the S&P, but I did it in the NASDAQ. I did it in the Dow and the Russell, along with the VIX cash. So if you'd like to take a look at the report, go to www.iraepstein.com. Under the word research, you'll see it there. It's short, about 5 minutes video. I think it answers a lot of the questions. I'm Ira. You have a good day, and I'll see you all tomorrow.